Ever noticed how you trade your worst whenever you're trying your hardest? There's a reason for that. You're down on the week, maybe down on the month. And every fiber of your being says, work harder, focus more, trade more, fix this. So you do. You stare at charts longer. You analyze deeper. You look for opportunities everywhere. You're grinding. You're committed. You're doing everything right. And somehow you're making it worse. Your brain shifts into overdrive. Every tick matters. Every candle feels urgent. Every setup looks like your ticket back to break even. The pressure builds with each red day. And suddenly you're not just fighting the market anymore. You're fighting yourself. Most traders experience drawdowns like seasons. They come, they go, they're part of the game. The difference between the ones who make it and the ones who blow up isn't whether they hit drawdowns. Everyone does. The difference is what they do next. And what most do next is exactly backward. They speed up when they should slow down. They trade more when they should trade less. They lower their standards when they should be raising them. Let's talk about why. 3 losses in a row. Nothing crazy, just 3 trades that didn't work. Maybe the market shifted. Maybe your timing was off. Maybe you were right, but early. Doesn't matter. What matters is what your brain does next. It starts calculating. Okay, I just need one solid winner. One good trade, and I'm back. Maybe a 15% move. Maybe catch an earnings play. Maybe find that momentum breakout. One trade fixes everything. Sound familiar? That's the story every trader tells themselves at the start of a spiral. And it sounds so logical, so reasonable, so doable. One trade. That's all you need. There's just one problem. That one good trade you need, it's not sitting there waiting for you. It shows up on its schedule, not yours. But your brain doesn't want to hear that right now. Your brain wants to fix the problem immediately. So what do? You start looking harder at charts, checking more time frames, scanning more symbols. And here's where it gets dangerous. You start seeing setups that would have been maybes last week. Setups you would have passed on without thinking twice. But now they look tradable. Not great, but tradable. Because tradable is all you need right now to start the recovery, right? Take a B+ setup, catch on a good day, boom, you're on your way back. Except B+ setups don't have A+ odds. They win sometimes, lose sometimes. And when you're already down, sometimes isn't good enough. You need consistent. You need high probability. You need the setups that actually stack the edge in your favor. But you're not taking those anymore. You're taking anything that moves. The forcing spiral has started. You enter a trade you know isn't your best work. It loses. Now you're down more. Now you need even more winners to get back. So the pressure increases. The urgency intensifies. And the quality of your trading drops further. You start revenge trading, overtrading, taking setups at 9:55 a.m. when your rule is no trades before 10 o'clock. Holding losers too long hoping they'll turn. Cutting winners too early to just lock in something green. Every rule you built when you were thinking clearly, gone. Because you're not thinking clearly anymore. You're in survival mode. And survival mode doesn't trade well. It trades desperate. It trades emotional. It trades reactive. This is the trap. This is why drawdowns are so brutal. Not because of the initial loss, but because of what the loss makes you do next. So if forcing trades makes it worse, and doing nothing feels impossible, what's the actual solution? Let's break down what separates recovery from destruction. Patience. That's it. That's the secret. And you probably hate hearing that because it sounds like non-advice. It sounds like something a motivational poster would say. Just be patient. Great. Thanks. Very helpful. But stay with me because this isn't about sitting on your hands doing nothing. Real patience in trading isn't passive. It's active. It's aggressive. It's one of the hardest things you'll ever do. Here's what patience actually means when you're in a drawdown. It means watching 12 setups form and pass because 11 of them are B grade and you're only taking A+. It means having a red day and not trying to make it back before the close. It means watching other traders post screenshots of wins while you sit in cash waiting for your edge. That's not passive. That's discipline under fire. Think about what your best trading looks like. Not your lucky trading. Not your everything went right trading. Your actual, sustainable, repeatable best trading. You wait for clear structure. You wait for confirmation. You wait for your specific setup that you've tested and know has an edge. You don't force anything. You don't chase anything. You don't trade out of boredom or urgency or hope. You trade setups that meet your criteria, or you don't trade. Now here's the truth that's hard to swallow. The version of you that's down 15% needs to trade more selectively than the version that's at all-time highs. Not less. More. Because you have less room for error. Because your psychology is already compromised. Because one more bad trade doesn't just cost you money, it costs you more emotional capital you can't afford to spend. When you're in a drawdown, A-plus setups aren't just preferable. They're mandatory. But finding A-plus setups requires something that feels impossible when you're down. It requires waiting. And waiting feels like you're not doing anything to fix the problem. It feels passive. It feels like giving up. That's the cruel irony of drawdowns. The thing that will save you feels like the thing that's keeping you stuck. Taking trades feels like action, like progress, like fighting back. Waiting feels like surrender. But here's what actually happens when you flip that script. You wait 3 days for an A-plus setup instead of taking 4 B-grade trades. Those 4 B-grade trades had maybe 55% win rates. You go 2-2, you're still down, and you're mentally exhausted. That one A-plus setup, 70% win rate. It's once. You're moving in the right direction with your psychology intact. The math isn't just about percentages. It's about preservation. It's about not burning more mental capital. It's about staying in the game long enough for probability to work. And probability will work. But only if you're taking trades where probability is actually on your side. Let's talk about what changes when you embrace this. Something interesting happens when you commit to patience as your recovery strategy. First, the pressure drops. Not completely. You're still in a drawdown. But the second you stop trying to force your way out, the urgency that was crushing you starts to lift. You're no longer racing against some imaginary clock. You're no longer trying to hit a daily profit target to stay on track. You're just waiting for your pitch. And when that pitch comes, you're ready. Not desperate. Not overthinking. Not carrying the weight of the last 5 trades. Ready. This is what traders who successfully navigate drawdowns understand. They know that their edge doesn't change based on their account balance. A-plus setup when you're up 20% on the year is the same A-plus setup when you're down 20%. Same pattern, same probabilities, same execution. The only thing that changes is your willingness to wait for it. When you're profitable, waiting is easy. You can afford to be selective. You're not stressed. The next setup will come, and you'll be there for it. When you're in a drawdown, waiting feels expensive. Every day without a trade feels like a missed opportunity. Every setup you pass feels like you're leaving money on the table. But that's just your emotion talking. That's not reality. Reality is that bad trades cost you money whether you're up or down. The only difference is you can afford bad trades less when you're down. So the time when it feels hardest to be selective is exactly the time when being selective matters most. Here's a framework that helps. When you're in a drawdown, your job isn't to make money. Your job is to not lose more money on stupid trades. That's it. That's the whole mission. Protect capital. Wait for premium setups. Execute those with discipline. The profit takes care of itself after that. Because here's what happens when you actually do this. You stop taking 3 trades a day, hoping one works. You take 1 trade every 2 days, knowing it probably will work. Your win rate goes up. Your confidence rebuilds. Your P&L starts climbing. Not because you're trying harder, because you're trying smarter. You're trading less, but trading better. And better always beats more when it comes to trading. Always. But okay, saying just wait for A-plus setups is one thing. Actually doing it when you're bleeding money is another. Let's get tactical about how to make this real. You need a filter. Something concrete that stops you from trading garbage. Here's the simplest one that works. Before every trade, write down 3 reasons why this is an A-plus setup for you. Not why it might work. Why it's your specific edge showing up. If you can't write 3 solid reasons without stretching or hoping or justifying, don't take the trade. That's it. Sounds too simple, but try it. Actually try it. Open your notes app right now and imagine your last mediocre trade. The one you took because you were bored or down or just wanted to do something. Write 3 reasons why that was an A-plus setup. You can't, can you? Or you can, but you're reaching. Well, the moving average was kind of in the right spot, and volume was decent. And it could have worked if. That's not A+. That's hoping. And hope isn't an edge. Now, think about your last genuinely good setup. The one where everything lined up. The one where you saw it forming and knew this was your trade before you even entered. Write 3 reasons for that one. Easy, right? The reasons flow. Support and resistance aligned. Volume confirmed the move. Your pattern printed clean. It was your setup. That's the difference. That's what patience is protecting you from. It's protecting you from the first trade. The maybe trade. The it could work trade. You only want the second type. The obvious one. The one where the reasons write themselves. Here's another tactical piece. Set a minimum waiting period between trades. If you take a loss, you don't trade again for at least 4 hours. Market closed? You wait until tomorrow. No exceptions. This isn't punishment. This is preventing the revenge spiral. That immediate need to get it back is what destroys accounts. The 4-hour buffer lets your emotions reset. Lets you see the next setup with fresh eyes instead of desperate ones. Will you miss some moves? Probably. Will those moves matter compared to the terrible trades you avoid? Not even close. And here's something most won't tell you. Track your A-plus setups separately. Keep a log of every trade that actually met your criteria versus every trade you forced. Review it weekly. You'll see the pattern immediately. The A-plus trades make money. The forced trades bleed it away. Once you see that in your own data, patience stops feeling like theory. It becomes obvious. It becomes the only logical choice. But you have to see it in your numbers. You have to prove it to yourself. Because when you're in the next drawdown and your brain is screaming at you to do something, you need evidence that waiting works. Your own trading history is that evidence. And when you have that evidence, when you've seen this work, something shifts in how you view drawdowns entirely. Let's talk about that shift. The best traders don't fear drawdowns. They expect them. They know drawdowns are the cost of trading. They're not failures. They're not signs you're broken or your strategy doesn't work. They're just probability playing out over time. Even a 70% win rate strategy loses 3 in a row sometimes. That's not the strategy failing. That's math doing what math does. But here's where the mindset flip happens. When you embrace patience as your core edge, drawdowns stop being emergencies. They become tests. Tests of whether you can still follow your process when it's hardest. Tests of whether you actually believe in your edge or if you only believe in it when it's working. The traders who make it long-term, they pass this test over and over. They sit through drawdowns waiting for their setups while everyone else is scrambling, forcing, panicking. And they come out the other side with their account intact and their psychology stronger. Because here's what patience during a drawdown proves to you. It proves you can trust yourself. It proves you don't need a trade to feel like a trader. It proves you're okay with doing nothing when nothing is the right play. That's powerful. That's the foundation of consistent profitability. Not finding some perfect strategy. Not mastering some indicator combination. But mastering yourself enough to wait when waiting is hard. Think about the traders you respect. The ones with 10-year track records. The ones still here after everyone else washed out. They're not smarter than you. They don't have secret indicators. They don't have better luck. They just wait better. They protect capital better. They avoid stupid trades better. That's it. That's the entire edge. And you can develop it starting with your next drawdown. Because you will have another drawdown. And another after that. This isn't a one-time challenge you overcome. It's a recurring test of whether you've actually learned this lesson. The question isn't if you will face a drawdown. The question is what version of yourself shows up when you do. The version that speeds up or the version that slows down. The version that lowers standards? Or the version that raises them? The version that forces trades? Or the version that waits for A-plus setups? Here's what nobody wants to hear, but everyone needs to understand. Fast recoveries are usually luck. Slow recoveries are usually skill. When you force your way out of a drawdown quickly, you probably just caught a hot streak. The market gave you a gift. You didn't actually fix anything. You didn't improve. You didn't learn. And that means the next drawdown will play out exactly the same way. Same panic, same forcing, same hoping to get lucky again. Sustainable recovery is boring. It's unsexy. It's waiting 3 days for one perfect trade, then waiting 2 more days for the next one, then building back slowly, carefully, methodically. No hero trades, no miraculous comebacks, just patience and probability doing their thing over time. But here's what that boring recovery gives you. Proof. Proof that your process works even under pressure. Proof that you can trust yourself. Proof that you don't need perfect conditions to trade well. That proof is more valuable than the recovered capital, because that proof is what lets you scale. That proof is what lets you stay in this game for decades instead of months. Fast recovery gets you back to break even. Slow recovery builds unshakable confidence. Which one do you actually want? Because you can have fast or you can have sustainable. You can't have both. Trading forces you to choose. The traders who make it, they choose sustainable every single time. Even when it feels like torture, even when watching paint dry would be more exciting. They wait. They're selective. They're patient. And they win not because they're better at finding trades, but because they're better at avoiding bad ones. So where does this leave you? Probably in one of two places. Either you're nodding along because you've lived this, or you're skeptical because it sounds too simple. Let me address both. If you've lived this, you know exactly what we're talking about. You've felt the forcing spiral. You've experienced the desperation. You've seen your good habits evaporate under pressure. The only question is whether you'll remember this next time, whether you'll slow down instead of speed up, whether you'll wait instead of force. Because knowing this intellectually and applying it emotionally are completely different things. If you're skeptical, that's fine. Test it. Next time you're in a drawdown, try it both ways. Try forcing trades for a week and track the results. Then try waiting for only A-plus setups for a week and track those results. Let your own data convince you. Because once you see it in your numbers, it stops being theory. It becomes undeniable. The secret to getting out of drawdowns isn't a secret at all. It's just doing the thing that feels wrong but works versus the thing that feels right but doesn't. Patience isn't passive. Patience is the edge. Patience is what separates professionals from gamblers. Patience is what turns drawdowns from account killers into minor speed bumps. And the beautiful part? It costs nothing. No new software. No premium indicators. No coaching program. Just the willingness to wait for your pitch. That's it. That's the whole game. Everything else is just details. Leave a comment if you like the content. Thanks for listening.